Africa is in trouble, and let me explain you why it matters. There is political instability almost everywhere. There have been at least 9 coup attempts in 3 years, and now Morocco is reeling from the worst earthquake to hit North Africa in a century. 2 decades ago, sub-Saharan Africa was the source of a lot of economic excitement. Growth was so rapid, incomes were rising, and a middle class was emerging. They call it Africa Rising. What's gone wrong in Africa? Many have pondered a myriad of factors, from growing Russian influence to ongoing political corruption in the continent. But the truth is, those are symptoms and not causes of what truly ails the continent: economic distress. I am Javier Blas, and I have been traveling across Africa for the last 20 years. Most of the time reporting about natural resources, but also reporting about the wars in the continent, and for many years reporting on the hopes of many in Africa for a better future. But for the last decade, things have not really turned as we were hoping. We are talking about a region that will be home to more than 3.5 billion people by the end of the century, about 1/3 of the global population by then. Over the last 20 years, the global economy has been able to get out of poverty millions of people in Latin America and in Asia. But so far, we have largely failed in Africa. We rely on Africa a lot more than we think. A lot of our commodities are coming from African nations. The oil of Nigeria, the copper of the Democratic Republic of Congo, the cocoa of Ghana and Ivory Coast. To keep things simple, we need to look a little closer at the numbers behind what's going wrong in order to come up with viable solutions. Measuring economic well-being across a continent as vast and as diverse as Africa, 54 countries plus several territories whose independence is disputed, is difficult. The result is obviously imperfect, but nothing beats looking at the region's GDP per capita as a measure of prosperity. On that metric, the troubles are clear. Sub-Saharan Africa GDP per capita peaked in 2014 at just under $2,000 and has since fallen more than 10% to about $1,700 this year. In the very same period, when Africa GDP went down 10%, global GDP did the opposite, increasing by 15%. The average African person has seen their GDP per capita, that's how much money they have, going down for already 9 years. And on current trends, they will not reclaim the previous peak for another decade or so. That's almost 20 years of stagnating personal income. Throughout history, periods of economic prosperity in Africa have relied heavily on commodities. When the prices of oil, tea, copper, cocoa, and other raw materials are high, the continent tends to do well. If you rewind the 1950s and 1960s, when many African nations won independence from European colonial powers, there was a golden era. Europe and Asia needed African commodities for post-war reconstruction, and Africa enjoyed rapid economic growth. But the continent's reliance on commodities became a curse. Low prices, mismanagement, corruption, wars, and the legacy of colonialism hampered Africa's development throughout much of the 1980s and 1990s. The situation was so bad that by 2001, regional GDP per capita in sub-Saharan Africa was lower than it had been in 1981, 20 years earlier. It became the hopeless continent in the eyes of many international investors. Then, starting in the early 2000s, China's boom supercharged commodity markets, and the fortunes of the continent changed dramatically. As prices rose from 2004 to 2014, regional GDP per capita more than doubled. Consultants and investors quickly ditched their hopeless continent cliché. This is when the term Africa Rising came into the picture. The problem is, lifting GDP per capita in Africa can be very difficult. It is a fight against booming population growth. Over the last 2 decades, the size of the region's population has doubled to 1.2 billion. With the population expanding at a rate of at least 2.5% per year, the region needs to grow its economy at a rather good speed to get GDP per capita rising at, say, a healthy annual rate of 2%, his real economic growth has to rise to nearly 5%. That's what happened in the early 2000s thanks to higher commodity prices. But this is not what is happening right now. There are multiple economic problems for policymakers to untangle. First, African nations can really get back on the path of economic prosperity without raising money from global investors, and that has become nearly impossible in 2023. Of all the regions of the world, the worst hit by rising interest rates has been Africa. Since the Federal Reserve started tightening his monetary policy in March of last year, ending a decade and a half of easy money, the region has been unable to tap the international bond market. Not to mention, Africa has a lot of debt. The foreign debt market was particularly important after the global financial crisis of 2008-2009 and during the worst days of the pandemic. Now the interest burden is rising, in some cases rising to a fifth of the country's revenue. Zambia and Ghana have already defaulted on their foreign debt. For many years, Africa relied heavily on the West, and when the donor money from the West slowed down, Africa relied on Chinese lending. From an all-time high of more than $28 billion in 2016, when Chinese lending to Africa surpassed the combined aid to the region provided by the American, French, British, and German governments, Beijing reduced his loans to a 16-year low of $1.9 billion in 2020, and since then, Chinese lending has largely flatlined. The natural disaster in Morocco should be an opportunity for the world to really refocus on Africa and see the needs of the continent. But in general, it's just lack of economic growth across the continent, the lack of opportunity. It is not all bad, however. The economic outlook for Africa isn't what it was 10 years ago, but it's a lot better than the dire prediction of the late 1990s. Inflation, even if elevated, remains under control. Democracy, even if weak, is the norm, but the problems are real. Without better living conditions, and that's what GDP per capita is about, there is no chance that democracy and freedom will be sustained, or that nations will have the resources to adapt to climate change. The West better start paying attention now, before it's too late.